So hello everyone, my name is Don the Taxman and I'm also an enrolled agent and we have lots of information for you. And today's subject is what other taxmen may not tell you and tips for business. And I want to introduce you to my friend from Arizona, Dick. Say hello, Dick.
Hello, Don. How are you?
Good, thank you. And the days are running out to adjust our 2014 tax returns as the year ends. So, Dick, I know as much as I know you're as important about the. Yeah, I know you're concerned about this as much as anybody because there's things we need to do before December the 31st, 2014.
Yeah, there's an awful lot that you have to do, and the tax laws, as you are well aware, are changing constantly. And unfortunately, they take an awful lot more time in order to go through all the preparation and do all the filing stuff. So it's pretty important that you start paying attention to it as early as possible.
That's right, and we're going to give you some tips today. So let's help the viewers with a few things, Dick.
Well, we've tried and posted a couple of things. I think they may be on both websites, backtobiz.com and taxshowradio.com. And they would probably be under the tips page.
Okay, and then there's some great videos also on media productions too.
Yeah, now the tips page we try and hold to the tips that's pretty much factual information, and then we of course have an area of perspectives, which usually gives opinion matters of people other than ourselves, and then we use editorials to comment on things that we say and may believe. And I know that between you and I sometimes we differ, but it's maybe it should be under perspectives. I don't know.
No, I think it's a right place for it. So let's talk about the first big thing people can do is to donate stock. Taxpayers who intend to make charitable contributions to lower their tax bill may consider donating stocks directly to charities. And there's a good reason for this. If you sell the stock and then give the money away, that stock's going to report on your Schedule D, and it may increase your taxable income, even though it may be capital gains long term. If it's capital gains short term, you're going to pay taxes on it at ordinary income. So it allows you to give away at fair market value the amount that you donated in stock. And when you do that, that means you're going to get the value as today's present value, not what you paid for the stock. So as well as having to and you won't have to pick up the capital gains on the sale of the stock, as we said before. So what do you think about that one, Dick?
Well, I think it's an excellent idea, but it also means that you have to be pretty much on top of your stocks, what you have as well. There's also a lot of considerations as to what kind of an account you have it in.
That's very true. If you have it in a IRA account, then donating it won't give you the tax deduction because it's being utilized in a non-taxable account.
Yeah, it really makes a difference. And I mean, they've got so many even different kinds of accounts now. You know, you got your standard brokerage account, then you've got the Roth IRAs, which of course use after-tax money to put into there, and then of course all of them have some restrictions for withdrawing the money, and then there's the regular IRA, and all of them have their different advantages and disadvantages.
And also you want to look at ahead of time what your mutual fund capital gains are going to be distributing, because that has an effect on what you're going to be paying in taxes also.
That could be a real trap, because a lot of them distribute all of those funds as opposed to keeping them in. So you really have to know what your fund is and how it treats its own capital gains and its own earnings and incomes.
That's right. And for those big earners, don't forget that over $200,000 in investment income, you're going to pay an additional 3.8 tax to health care. So it becomes very expensive if you're not watching your capital gains. Okay, also another factor is tax factors that all dividend investors need to know: master limited partnerships. We talk about those all the time because there are a good tax advantage to it. But if it's a short-term master lease or partnership, then you're gonna be paying the ordinary income on the investment on the profits of that master lease. So you want to be aware of those things coming to an end also.
Well, again, I think that one of the biggest considerations that you have on the MLP or the master lease partnerships is what kind of accounts you hold them in as to what kind of treatments they have. Again, the one big advantage to the MLPs is usually they're relatively high income devices compared to what most normal stocks and everything would pay. So they're very privileged from that standpoint. But if they make the distributions and things directly to you, then that could become taxable income to you at a higher rate.
And those are very tricky when you're in retirement accounts too. That makes them complicated.
Yes, they are.
So be careful when you do those MLPs, where you put them in your investment portfolio. All right.
MLPs, on your MLPs, you've got multiple kinds of the MLPs as well. You have REITs, which are a form of an MLP. A lot of them have to do with either transportation and pipeline kinds of things. And more often than not, a lot of the oil producers are now going to an MLP format as well. So you really have to know what you're dealing with, what their income earnings stream is and how it arrives, and what they do with it. You have to know what their objective is before you really buy it, before you can align it with your own.
That's true. Very, very true. Okay, another one we don't want to forget about is gifting money to your friends and to your family. Each year you're allowed to give away $14,000 per individual per spouse. So if you have a grandson that you want to move some money to, your wife can give $14,000 to him, and you can give $14,000 to it, and it's under the limit per person, and so you don't have to make a gift tax form on it. The only caveat is if you're older and you pass away within 3 years, they can say that's anticipation. But usually you can argue their way out of that. But if you've got older folks that are just on the edge of going to the new life, you want to be careful about gifting their assets, because that would be showing that you're trying to transfer estate money. But that being said, don't forget that gifting can be tax-free if it's under $14,000 per person. All right, the other one, Dick, go ahead. What's your question?
Is it a fair statement that the IRS agents, in a case where you have a gift in anticipation of death or something, they're usually not going to go into those matters or to that depth unless you've got a real big tax burden involved? Would I be correct in saying that?
Yes, you would. However, what they're looking for is bases. So when you file a 706 or a 1041, which is an estate return you file every year, trust return, if they look at bases, and if they think there's a problem with bases, then they send you letters. But yeah, it's only the big guys they're looking for, because there's a giant tax rate of starting this year at 40% estate taxes. So on $5,340,000 above. So if you're under the $5 million, you don't have to really worry about that 706. But if you have state return that's got income on it, and you're going to keep that beneficiary up for a while, then you want to file that 1041. And again, they're looking at basis most of the time. Okay, timing your gift too. The gift must be completed by December the 31st. So when you're writing a check, that's fine as long as it shows it was cashed. But it's got to be dated December the 31st and out of your hands if you can prove it. So that's one of the things about.
Does that correspond with your taxable year? In other words, if your taxable year is something other than December 31st, would you have the last day of your taxable year?
The answer is there aren't many taxpayers who aren't December the 31st. If you're a corporation, you might have one, but most of the time on corporations, if there's a substantial amount of majority stockholders, then they're going to say it's the majority stockholders' date starts your corporation. So starting a corporation in the middle of the year doesn't seem to work all the time.
Okay.
All right. Okay. Another thing I was going to talk about was, and I don't see it here, but we're going to talk about if you're 70 and a half, we think that the new law or the reinstating of the 2013 law was that you could give away out of your IRAs up to $100,000 to your favorite charity. So that's one that you want to hope that it gets passed again. So again, though, political contributions are unique. They are not tax deductible, but neither do they fall under gift tax rules. Both charitable and political contributions remove cash assets from estates without decreasing the lifetime exemption. So when you take money out of your IRA, or I should say out of your estate, and you give it to a political contribution, that doesn't count for gift taxes. So that's an interesting one too. That's about it for right now, Dick. As we come up with it, I only had a few points. There's more on our website, which again, Dick, is.
There's two of them. Back2Biz, all one word, .com, and TaxShowRadio, all one word, .com. And they're usually under the menu item of tips. I have another tip for the people too, Don, that
please pass it on.
Is not directly related to this, but you mentioned that IRS would send you a letter. And in today's world of cybercrime, you're seeing an awful lot of emails that come through claiming to be the IRS.
And you're also getting phone calls.
Email you.
You're also getting phone calls of people who are claiming to be IRS, and if you mail them a check right away,
they
then
don't mail you, and they don't call you directly.
Exactly. Watch out for that big scam that's going on.
It's getting worse and worse and worse.
It certainly is. It certainly is.
Just dump it and trash it. Whatever you do, don't open it, because they got a couple of new viruses coming out now that are just horrible, and they really don't know what to do with them.
All right.
Got a notice from the FBI the other day about it, and it's really got them worried, Don.
Yeah, everybody's worried about cybercrime now. That's the big thing. So, all right, until next time, we hope that everybody has a successful last year, and that new year turns into a better year, even better. So, thanks for listening.